In chapter 21, we're going to be talking about cost, volume, profit analysis. So this chapter is going to be a lot different from the previous chapters because we actually have no journal entries, but it is a very interesting chapter, and we're going to learn a lot about how to categorize cost and really make meaning from the information that we're given. All right, so let's get started. So we'll be going through these objectives. We'll review these at the end and make sure you understand. But first we're going to start with objective 1. So cost behavior is the manner in which a cost changes as a related activity changes. So some costs change as the volume of sales increase or decrease. Now when we see the word volume and how volume affects cost, don't be thinking about volume as an audio volume. Instead, be thinking about quantity. That's what we're talking about. So changes in, for example, how many of something that we sold, that would be volume. Other costs are not affected by change in volume, so we're going to identify the activities that will cause the cost to change, and then we need to figure out the range of these activities, and this is called the relevant range. We're going to classify these costs as either variable cost, fixed cost, or mixed cost. And then or a cost which is a combination of variable and fixed is what mixed is. Variable costs are costs that vary in proportion to changes in the activity base. And when the activity base is units produced, direct materials and direct labor costs are normally classified as variable costs. So let's look here at this, and here we're going to be making stereo systems, and we are looking at the variable cost per stereo system or per unit, and it is $10 per unit. So the variable cost per unit would be $10. That means for every stereo system or unit that is made, we will spend $10. So if we make 0, then we would have 0 variable costs. Then if we make here 5,000 units, we will have 5,000 times 10, 50,000. And this is the direct materials variable cost per unit. So that means that the variable costs remain constant per unit, per every stereo unit, or the number of units produced, it is $10. So that stays constant, but as volume increases, the more that we produce, the more the variable costs go up. So the more stereo systems I make, the more variable cost I have. So if we look at variable cost in a graph, it will always start at 0 for the total. If I make 0 units, I don't have any variable costs. And then it will go up in a straight line, and it will continue to go up because the more tablets I make, the more variable costs I will incur. But notice over here, this is the unit variable cost. It's no matter how many units I produce, each unit will cost $10, but total variable costs will start at 0 and continue to climb up proportionately. So I'm kind of working backwards here. So the characteristic of variable cost, the cost per unit remains the same regardless of changes in the activity base. So whether I make 0 units, 10,000 units, 20,000 units, the cost per unit is still $10. And then the total cost is going to change in proportion to changes in the activity base. It's going to be $10 per unit, so it's going to go up by $10 for each unit that I produce. So here's a chart of variable costs, some examples in their activity bases. So for a university, instructor salaries, the activity base may be the number of classes. Let's look at one more. Hotel, the maid wages. The activity base may be the number of guests. So it's going to go up by the amount per the number of guests. Let's look at fixed costs. So fixed costs are different. They don't change in total over ranges of volume of activity. They remain the same in total dollar amount as the activity base changes. So when the activity base is units produced, many factory overhead costs, such as straight line depreciation, are classified as fixed costs. So here, the salary that I pay somebody is a fixed cost. So the production supervisor is paid a salary of $75,000 per year. That would be a fixed cost. It doesn't matter if I make 0 tablets, okay? Or if I make, so here we're looking at bottles of perfume. If I make between 50,000 to 300,000 bottles of perfume, my salary would be $75,000. So that's my relevant range. So since the salary within this range is fixed, it's the same, the more I produce, the fixed cost per bottle will go down. Because why? You're dividing your salary by the number of bottles. So the more that bottles you produce, the less you're going to assign to each bottle. So here is your characteristics here of fixed costs. Cost per unit is going to go down as the activity level goes up because you have more units to distribute that fixed cost to. And if we don't produce as much, if our activity level goes down, then the fixed cost per unit will increase. There is an inverse relationship there. But the total cost is going to remain the same regardless of changes in the activity base. So let's look at this graph here. Okay, so if I went to look at fixed costs, all right, here is our unit fixed cost for your graph. It's going to go down with the more units I produce. Stay with me for just a minute and take a look at this. If I have total fixed cost of $75,000 and they stay the same no matter how many perfume bottles I make, then if I make just going back to the relevant range, if I make just the 50,000 bottles, I'm going to divide my 75,000 by 50,000, and that will tell me how much my fixed cost was per bottle, which is $1.50. But the more tablets I make, the more that I make, the less the fixed cost, bottles, the more perfume bottles I make, the less the fixed cost will be per bottle. Okay, so it's sort of like if you pay somebody a salary, it's pretty expensive to make one perfume bottle, but it's going to get less expensive the more bottles you make because you're able to spread that fixed cost over more bottles. But notice the total fixed cost is constant here with that relevant range, because I'm going to pay that salary. I'm going to pay that salary of $75,000. So here are the fixed costs for a university, maybe the building. You're going to have a set amount of depreciation. If you use straight line, it's going to be the same. For manufacturing, a plant manager salary would be fixed. And you're going to divide it by the number of units produced. That would be your activity base. And then a hotel property taxes would be divided by the number of guests. Okay, now we're going to look at mixed costs. And mixed costs have both fixed and variable components. And they're sometimes called semi-variable or semi-fixed costs. So you may want to think about mixed costs for things such as a cell phone bill. Okay, because think about a cell phone bill. If you get charged a flat fee plus any amount you get charged for going over your data or something like that, that would be a mixed cost. You have a fixed cost component and you have a variable cost component. Or you can think of it as a cable bill. You have a fixed cost that you pay. Then if you buy any on-demand movies, then that would be a variable cost. Amazon Prime, for example, that would be one where if you pay for Prime, but then you buy a movie, you would have a fixed cost and a mixed cost in there. All right, so here, Simpson Company manufactures sales using rented machinery. So the rental charge is going to be $15,000 per year, so that is your fixed. And then you're going to have $1 for each hour used in excess of $10,000. So there is your variable component. So as you can see, if you use 8,000 hours, you only have to pay that fixed cost. But if you go over the 10,000, here, if we use 12,000, we would have the 15,000 plus the 2,000 of hours we went over, because 12,000 minus 10,000 would be 2,000, and we have to pay for that 2,000 hours over $1 each. So 2,000 times $1 would be 2,000, plus your 15,000 would be 17,000. So for all of these, you're still going to pay that fixed cost component, but the variable cost is going to go up the more you get above 10,000 hours. So this is what a chart of mixed costs looks like, because it has a mixed cost component. It starts at a fixed and then it goes up for the portion that is variable. And for our example, the portion that is variable is anything above 10,000 hours.